La banque Afrexim Bank est une banque panafricaine, donc francophone, anglophone, arabophone, lussophone. La banque est complètement, elle croit dans le panafricanisme et tout le monde est accueilli. On accueille tout le monde et tout le monde est le bienvenu à la banque et à nos événements. So today we're launching the PAFTRAC CEO survey. So the CEO survey was conducted in August and September. So obviously before the rise of the new variant. And we'll be hearing from Patrick Utomi, who's the AFCFTA Relations and Trade Policy consultant at the Afri-Exim Bank. He'll be taking us through the survey results. So I wanted to make a point before Patrick took us through a brief presentation, is to say that ultimately the African Continental Free Trade Agreement and the free trade area, ultimately, it's a political project, but ultimately it's a project for businesses and for the benefit of Africans and African businesses. So ultimately, it's not a project that is there for the glory of policymakers. Rather, it's a project designed to increase or to grow African economies and to increase intra-Africa trade, obviously, and increase investments across the board in Africa. That's the real objective. So ultimately, policymakers need to hear from private sector players. They need to hear from the people on the ground in terms of what's impacting and affecting their business on a day-to-day basis, and what do they need to grow their businesses. So only then will we be able to design the conditions to help African businesses grow. So this dialogue is very important. And ultimately, we've got an institution called PAFTRAC, which is the Pan-African Private Sector Trade and Investment Committee. The secretariat is hosted by the Afri-Exim Bank. We've got the chairman of PAFTRAC here today with us, Professor Pat Utomi, who I met from the Lagos Business School over a decade ago. And I actually stayed at his house in Anambra State also a few years back when I was on my travels in Nigeria. But the point that I'm making is PAFTRAC is an organization that is here to support private sector. The opportunity that PAFTRAC provides the private sector is that it sits at the intersection of private sector and policymakers. Given that we've got influencers within both private sector and public sector, it can help determine the future of the AFCFTA, the success of the AFCFTA, and it can help serve the interests of the private sector. The point that I'm making is that we want you to be participating with PAFTRAC, and we want you to be feeding through your concerns, your experiences to PAFTRAC so that we can relay this back to the policymakers at the AFCFTA Secretariat, at the AU and other international organizations that are here to support businesses ultimately. This is about you, it's not about us. It's not, the policymakers obviously will, they'll get their rewards at the ballot boxes, but ultimately this project is about you. And I think this is an important message, because unless we have this dialogue, and unless we continuously have this dialogue, which is what PAFTRAC will be doing, we'll not be able to get to where we want to as quickly as we want to. Time obviously is very important, but I'm delighted to be here today because we'll hear from different stakeholders, the AFCFTA Secretariat, we'll hear also from Afri-Exim Bank, we'll hear from an international partner in the ITFC, part of the Islamic Development Bank, and we'll also hear from Dr. Asfour from the African Business Council, who is extremely dynamic and can provide a private sector perspective in terms of what we need to move forward. But ultimately, this is not a one-off event. We'll be conducting more surveys next year. And what we want to do is we want to engage with the private sector and all players ultimately. The private sector is a 5-person business to a 5,000, 10,000, 50,000 person business. So we want, and you're all as important to making sure that the AFCFTA is a success, that we hear your concerns, and that we make sure that we overcome them. I speak for myself when I say that we believe in markets, or I believe in markets and in market economies, but ultimately what we've seen is that markets will have will fail. Markets are not perfect. On the contrary, we're here to correct market imperfections. And this is what we're trying to do. So without any further ado, I'd like to invite Pat Utomi, who's the AFCFTA Relations and Trade Policy Consultant at the Afro-Exim Bank, to talk us through the survey results. And I read the report, and the report will be shared on the chat, and we'll share it with you again after this meeting, the report link. But Patrick will take us through some of the report findings, and they make for interesting reading. Patrick, the floor is yours. Thank you.
Thank you very much, Omar. And a good morning to the distinguished panelists and everyone joining us here today. As Omar said, my name is Patrick Utomi, and I am with Afro-Exim Bank, with the African Union and AFCFTA Relations and Trade Policy team. Afro-Exim Bank acts as the secretariat for PAFTRAC, and today I will be presenting you with the results of the Pan-African CEO Trade Survey that was carried out by PAFTRAC. I will be sharing my screen with you. Omar, please, let me know if everyone can see what is being presented. And if so, I will begin.
We can, I believe, yeah.
All right, let me get right to the beginning. There we go. All right, and I will try to go through this as succinctly as possible. I will start with the methodology that was employed for this survey. In deploying it, PAFTRAC utilized a 44-question survey with both quantitative and qualitative questions, and the duration of this was 4 weeks. It was deployed in English and French so that both the Francophone and Anglophone respondents could respond. And at the end of the day, respondents were generated from 46 countries globally, 44 in Africa, and 2 beyond. These graphs here give you a breakdown of the survey results. As you can see, the respondents are pretty geographically diverse, with the majority coming from West Africa, 47%, East Africa, 19%, North Africa, 14%, Southern Africa, 10%, and Central Africa, 8%. The other regions were the Americas and the Middle East. While the respondents were geographically diverse, one thing to note that's important here is that a lot of the respondents, majority of them were SMEs in terms of their annual revenue. About 50% of the respondent businesses earned less than $50,000 annually. Over 20% earned between $50,000 and $250,000. However, less than 10% earned between $250,000 and $1 million and above. The top industries represented were agriculture with 30%, information and technology, financial services, and real estate. Now, this is important in that it reflects the importance of SMEs in Africa, because SMEs provide an estimated 80% of the jobs across the continent. I think sub-Saharan Africa alone has 44 million micro, small, and medium-sized enterprises, almost all of which are micro. And addressing the concerns of these SMEs are therefore important to ensuring the success of the AFCFTA. We move on to the composition of trade in Africa according to the respondents. The top 5 most common products that were exported to Africa after this survey were found to be food, drink, and tobacco at the top, followed by insurance, financial, intellectual property, and other professional services, then agricultural raw materials, manufactured goods, then telecommunications, computer, and information services. Now on the products going out of Africa, at the top you have the agricultural raw materials, followed by food and drink, insurance, financial professional services, then machine and mechanical equipment, then textiles, clothing, leather, and shoes. So you can see there's a commonality between the two, going out and coming into Africa. However, there is a key difference. You will notice that, for one, manufactured goods are high amongst the goods exported into Africa, but you will not see them on the list going out. Now, these manufactured goods with their added value and higher price tags highlights the importance of exporting higher value-added products and services as opposed to primary commodities, which Africa is biased towards. And this is one area in which Africa needs to rebalance the scales, exporting more value-added products and manufactured goods in order for it to be more competitive in trade. One other thing to note is that financial services ranking highly in the top 5 for both imports and exports shows the importance of services driving intra-Africa trade, especially as the world continues to innovate and incorporate technology. And Africa will have to place a greater emphasis on this sector if it seeks to be competitive in this rapidly evolving market. We then move to the mode of transport for imports and exports for these companies. As you can see, the plurality of these respondents use the roads to transport their goods, as well as air and sea freight. And this supports the push of African governments towards infrastructure development, particularly in the ports and airports, and in the upgrade of roads. However, one thing to note is that the rail network is pretty disjointed, because you can see that only 3% of the respondents use rail. It's a similar story for the imports, with majority of the respondents using the sea and air freight and the roads, but only 3%, again, using rail. So roads is the most common type of transport for importing, exporting goods, but use of rail is falling very far behind. And this shows that African ports are heavily relied on as opposed to roads, because the roads have a multitude of issues, including infrastructure deficits that make trucking very expensive. And so while the roads are very widely used, it's very high cost for many businesses. And when it comes to the imports, although the ports are heavily relied on, challenges continue to stem from a lack of efficient multimodal transport linkages to these ports, meaning that even when the goods make it to these ports, it is often difficult to move the goods from them. In Nigeria, for instance, it's common to hear of goods reaching the ports within days of shipment from their original countries of origin, only to spend weeks at the ports, if not months, due to these infrastructural challenges. And these infrastructural challenges spread not just inside the country and transporting goods from one end of a country to another, but it affects the whole of intra-Africa trade, because if you can't get goods from one part of your country to another, how do you expect to get them from your country to other countries across the continent? And this issue will need to be addressed. Moving on, you see the top 4 export destinations in Africa for these countries, for these respondent businesses, I'm sorry. You can see at the top, South Africa, with 20% of the respondents exporting there, followed by Ghana, then Kenya, and Nigeria. And this just highlights that most of the common export destinations are the continent's largest markets, which have a high amount of trade activity and have been established as dominant trade hubs. However, this picture is most likely to change as the AFCFTA goes into implementation. The next slide shows the imports continent of origins for these companies. As you can see, a majority of the imports come from Africa, followed by Asia and then Europe. This displays that intra-Africa trade is actually high in certain parts of the continent, primarily the strong trade hubs. If you break down the Africa trade, you see South Africa, Ghana, and Kenya again featuring highly as countries that trade goes on in, while intercontinentally, Asia and Europe are the other countries that are alongside Africa. Now, this is good in that it shows that the future is bright for intra-Africa trade, and the continent is actually trading within itself and amongst itself. According to the ITC, the share of processed and semi-processed goods in intra-Africa trade is 61%, compared to 37% in exports to the rest of the world. And additionally, African countries trade with each other more technologically advanced ways than with the other regions. So this demonstrates the potential for the AFCFTA, particularly as technological solutions are being utilized across the continent. Speaking of the AFCFTA and unlocking its full potential, the respondents were asked how they felt about the AFCFTA, their sentiment, and whether they felt there would be an increase in intra-Africa trade after the AFCFTA was implemented. As you can see, a majority of respondents believe that there would be, with 87% responding so. 87% also believe that this effect would be moderate or high. So there's a very positive sentiment with the AFCFTA coming into force. And initial studies have shown that intra-Africa trade could increase by over 50% in the next 10 years, and the AFCFTA has the potential to lift about 30 million Africans out of poverty. And with these statistics, there's little wonder why the sentiment towards the AFCFTA is positive. Moving on to the next slide, we asked respondents if they believed that the AFCFTA would encourage them to invest in their business and grow it regionally, and what the AFCFTA would help them do. From these bar charts, you can see what the majority of the respondents' responses were. And a lot of the businesses do believe that it would help their businesses export more regionally and encourage them to grow their businesses. Half of the respondents also believe that the AFCFTA would open up new markets, both regionally, as well as providing the necessary frameworks for them to do so. So again, we see positive sentiment towards the AFCFTA. And the potential of the AFCFTA, you can see it extending beyond trade, as it will stimulate both domestic and cross-border direct investments. So we are looking at development, not just within Africa, but from extra Africa as trade within the continent progresses. Now, the next slide is very critical because it highlights a particular challenge the respondents faced when accessing information about the AFCFTA. Respondents said 62% of the respondents were unsure of where to access this information regarding the AFCFTA. And as such, stakeholders that drive AFCFTA implementation will have to ensure that up-to-date information about the AFCFTA is accessible on channels that people frequently use to access information. This is very relevant because now we live in a technology-driven age. Everyone uses search engines, social media, and websites and email to access information. And other sources such as government authorities, regional blocs like ECAS, EAC, ECOWAS, and your traditional media are very distant compared to the information found online. Right now, even if you wanted to contact the government authorities and regional blocs such as ECOWAS, you would pick up your phone and find out how to contact them. So the world is now heavily leveraged on technology, and providing people with these means to find information through technology will be very important in ensuring the success of the AFCFTA. The businesses were then asked what could be done to help their businesses benefit from the AFCFTA. You can see that 76% of respondents mentioned that an online platform to connect buyers and sellers continentally could help support their businesses in benefiting from the AFCFTA. And digital solutions once again come to the front because these online solutions and digital solutions were placed in a higher regard over physical ones, such as the designated AFCFTA office in country. 47% of respondents also placed an emphasis on solutions that promoted open sharing of information about the AFCFTA and its beneficiaries. Again, this goes back to supporting other survey data showing that most of the people find their import and export regulation information online, and it also points to the growing internet penetration across the continent. Now, this also highlights the need to strengthen Africa's online information resources to connect buyers and sellers. And here you can see companies like Afrexim Bank stepping in to offer solutions. Afrexim Bank is currently undertaking its such as its Pan-African Payments and Settlement System, PAPT, and its due diligence repository, MANSA, as a response to these demands. Another initiative being implemented in this regard is the African Trade Gateway by Afrexim Bank, which will act as a one-stop shop essentially for all these digital solutions, ensuring that they are easily available to interested parties across the continent. The next slide speaks about the confidence in business growth and optimism on the industry's economic outlook that was posed to the respondents of the survey. The respondents were asked how confident they were that their business would grow over the course of the next 12 to 18 months. 66% of these respondents were either confident or very confident that these businesses would grow, and they were very optimistic about the industry that they operated in as a whole, with 62% of these respondents being very optimistic about their industries. With regards to the economic outlook for Africa in general, 93% of the respondents were at least somewhat optimistic about the development of Africa. 64% of the respondents believe that global economic recovery would lead greater demand and be a reason for this growth. So it's interesting to see that these respondents believe that a growth of international trade and the development in regional trade strategies and agreements, such as the improvement of trade openness through the AFCFTA, would be a stimulating factor for growth, as opposed to national economic recovery strategies, such as the lockdown restrictions or better national business climates. So what this points to is that people see the global economic recovery as a main reason for Africa's economic recovery. So a rising tide would lift all ships, so to speak. Some respondents were negative about Africa's recovery prospects, and the survey inquired why so. And so the respondents who were negative said that the main justifications for the negativity were access to finance being a constraint, as well as the ongoing pandemic and the slowdown or lack of public sector investment and expenditure. So you can see that the biggest issue is in access to finance, followed slowly by the lingering effects of the pandemic, which continues to evolve. And but this data matches the respondents' view that access to finance is the main factor inhibiting business growth and the constraints to trading regionally, especially considering that a lot of these companies are SMEs and might not have the access to finance that a lot of the larger companies would have. speaking to factors that would prevent individual businesses from growing, the respondent said that the top factors would be political effects, such as the policy environment and political instability, tax and finance related effects, as well as business specific reasons such as direct competition, access to raw materials, and the cost of doing business. When asked about their constraints to trading within the region, companies said that the issues they faced primarily were transit and customs issues related to cross-border trade, as well as tariffs and security and safety. Now, these results indicate a high dissatisfaction with transit, customs, and tariffs, and highlights the premise that in order to ensure a faster, smoother transit of goods, nations have to discuss ways to standardize customs and border management, as well as transit trade. Fortunately, in this regard, there are a number of initiatives to address this, including cross-border road transport permits, standardized axle load limits, which is the amount of weight is allowed to carry on the road, standardized border post operating hours, digital custom duty certificates, and standardized tariff books. Additionally, companies like Afreximbank are offering their own solutions. Afreximbank in particular is working on the collaborative transit guarantee scheme, which aims to reduce the bottlenecks and costs associated with the movement of goods across borders within Africa. Under this scheme, in Africa, Afreximbank will provide a transit guarantee directly or indirectly to eligible beneficiaries, meaning that it acts as a continental guarantor, and any African governments will recover import duties in the event that transit procedures are not completed. This will thus ensure that tax collecting across Africa is enhanced. The next slide speaks to the financial constraints within intra-regional trades for these companies. They were asked what the main financial constraints the business faced when trading, and most of the respondents did place access to finance and investment capital as the biggest. So on these bar charts you see here, the yellow ones are the highest priority, which have the most weight. And access to trade finance has the most, with 77%, and access to investment capital following with 52%. The rest, such as access to foreign exchange and limited correspondent banking, do not rank as highly, though they were mentioned as challenges to accessing finance. Based on this, what are the policy recommendations that PAFTRAC recommends? PAFTRAC recommends availing trade intelligence and trade market information and capacity building to identify markets for products and services under the AFCFTA. This speaks to the high demand for information and resources online for information, especially as a lot of these companies are small and medium sized and will be looking for information on the internet, not just in terms of the AFCFTA, but in finding potential business partners. Secondly, the recommendation is that investments in trade enabling infrastructure and building efforts export logistics by facilitating linkages through the value chains from producers to large exporters. Next, building SME capacity to comply with quality standards, packaging requirements, and customs procedures. Additionally, we're recommending assistance and capacity building to formulate long-term business plans that include product upgrades, information, innovation, and diversification. Again, we are looking at smaller and medium-sized companies, and they will need a lot of help compared to their bigger counterparts in the industry in this regard. So assistance from companies such as Afreximbank and other trade financing institutions will go a long way in bringing these companies to the fore in participating in intra-Africa trade. And finally, we are moving for the facilitation of access to credit and long-term financing mechanisms to greatly enhance trade under the AFCFTA. The full report on the PAFTRAC's Pan-African CEO survey can be found online through this link, and I would ask that the team at IC please drop the link in the chat so that all the participants are able to access it. And you can also access it by registering on the Africa CEO Trade Survey event page if you haven't already, and you will receive the report once it's released. With that, presentation is concluded. I'll hand back to you, Omar. Thank you very much.
Thank you very much, Patrick. Fantastic presentation. Interesting results from the survey, and I'm very pleased to see that the businesses that were surveyed were very positive in terms of the impact of the potential impact of the AFCFTA, and also Africa's outlook over the next year or so. Obviously, we live in uncertain times, as they say, but it's good to see that the outlook is positive in terms of at least from the business leaders' perspective. So, just to a quick caveat in terms of the survey, it was conducted in August, September, as I said in my intro. So prior to the discovery of this new variant. So I'm not sure whether that will change the outlook in terms of businesses on the ground. But before we go into the panel discussion, I'd like to hear from Professor Pat Otomi. So you're Patrick's namesake, who I've known for about 15 years or so, who I met actually at the Lagos Business School when he hosted the US ambassador at the time, and Bismarck Rwani, a distinguished Nigerian economist who gave us his outlook on Nigeria at the time. It was a great period to be in Nigeria. It was around 2005, 2006. So we had seen the consolidation of the banking sector, the growth of business conglomerates such as Dangote and others, and also the advent of the telecoms boom in across Africa. So double-digit growth or close to that. So it was great times, but today it's about the AFCFTA. And I read in your forward, Professor Otomi, that you said that the AFCFTA has the potential to boost intra-Africa trade by 52% by eliminating import duties, and to actually even 100% if non-tariff barriers are also reduced. So this is what this is about. It's about, we know the stats going from 15% to 30% of intra-Africa trade within the next, or by 2030, let's say. So anyway, what's your reaction to the trade survey, and were you surprised by any of the findings? Professor.
Well, thank you so very much, Omar. By the way, let me remind you that I met you even long before that in London, many, many years before. But we had that formal meeting at the Lagos Business School, where we were trying to break new ground in terms of how the public sector, the private sector, and the international community collaborate to advance economic performance. But let me make some remarks here, and I'll return to some of the earlier remarks you made in rounding up my reflection here on this report. Very distinguished panelists, ladies and gentlemen, a very good afternoon or morning, depending on where in the world you are, because I know that we've got participants from across the planet. I would like to thank you all for taking the time to attend this session, which has been organized by the Pan-African Private Sector Trade and Investment Committee, PAFTRAC, to discuss how African private sector can unlock the potential that we have to make progress on the continent. Just a quick one, yeah. It almost goes without saying that the future of the global trading system faces more uncertainty today. This is why the subject that we are deliberating on came up in November during a meeting that we had at the AU Private Sector Forum in November of 2021, which I had the privilege of participating in. Trade faces structural hurdles, challenges posed by fast emerging new technologies, rising protectionism, and weakening support for the rules-based multilateral framework, which has governed international trade for decades, factors today. Furthermore, the rampaging COVID-19 pandemic continues to impact global trade bodies, as exemplified by the recent postponement of the WTO ministerial, which was already struggling with its negotiations on key trade issues, including fishing subsidies and intellectual property rights, highlighting the growing divide between developed and developing economies. Distinguished ladies and gentlemen, 2021 has been a challenging year and is looking to conclude on the same note, with the Omicron variant of the COVID-19 pandemic throwing the world into another series of restrictions on cross-border travel and negative economic impact. Amidst all of these challenges, trade remains one of the most important drivers of economic growth and a means through which African nations can insulate themselves from economic shocks, such as those resulting from the effects of COVID-19. However, Africa has not captured enough of trade's growth enhancing benefits. Despite accounting for around 70% of the world's population, Africa's share of global trade has stagnated at below 3%. Africa's marginalization in global trade is in no small part due to its continued reliance on the exports of primary commodities and its bias towards extractive sectors, and consequently, extra-African trade. This initially helped Africa achieve amongst the highest growth rates in recent years, but also increased the region's exposure to global volatility and adverse terms of trade with their shocks. The excessive reliance on primary commodities and stubbornly low levels of intra-African trade, despite the integration efforts undertaken since independence and the establishment of regional economic communities, the RECs, means that Africa's economic fortunes remain contingent on commodity price movements and external shocks. Recognizing that enhancing intra-African trade is essential to mitigate against global volatility and help enhance diversification and competitiveness, the Assembly of Heads of State and Government of the African Union in 2012 adopted a decision to establish an African Continental Free Trade Area, AfCFTA, and endorsed an action plan for boosting intra-African trade. Ladies and gentlemen, Africa has charged ahead with its economic integration agenda. Trading under the African Continental Free Trade Agreements commenced this year. The AfCFTA is an important step towards rationalizing Africa's regional trade arrangements to deepen economic integration and draw economies of scale and development of regional value chains to accelerate the process of industrialization of African economies. Preliminary estimates and simulations suggest that the AfCFTA could significantly expand industrial production and intra-African trade, with the latter expected to more than double within the first decade of implementation. A study undertaken by the Afreximbank notes that as intra-African trade comprises a higher skill and technology content compared to Africa's trade with others, the AfCFTA can improve the diversification of sources of growth and trade of AU member states. An integrated African market is also likely to see enhanced flow of foreign direct investment to the benefit of participating economies and could shift FDI from natural resources to industry and manufacturing as investors seek to take advantage of increased market size and enhanced economies of scale. Implementation of FTA, and the broader Agenda 2063 will also enhance the integration of African economies into the global economy and strengthen the process of engagement between Africa and its main trading partners, multilaterally within the WTO framework and bilaterally with other trading partners such as Brazil, China, the EU, India, and the United States. Well, ladies and gentlemen, the promotion of economic integration under the African Continental Free Trade Agreement has the potential to raise efficiency gains through the improved resource allocation to expanding sectors, foster greater competition, expand markets and consumer choices, improve access to international capital markets and investment flows. It also has the potential to accelerate the process of technology transfers and raise the inflow of foreign direct investment into Africa. However, while these changes and reforms in the institutional and policy space are significant and game-changing, their development impact, especially in terms of economic growth, trade, and continental integration, depends on the strength and transformation of the African private sector. That is so key. In this regard, to ensure the success of AFCFTA and indeed the regional trade and investment agreements, it is imperative that the African private sector be engaged in their design, negotiation, and implementation. The success of these agreements hinge on the private sector, as agreements are always secured for private sector actors who are locked into the implementation. It is the private sector that are the direct investors of capital, and they are the producers and manufacturers, marketers, distributors, and consumers of goods and services. To this end, it is critical for the private sector to be involved in the negotiations, design, and implementation of such agreements, as they are the ones most directly affected by them. It was with this in mind that the Pan-African Private Sector Trade and Investment Committee, PAFTRAC, was constituted as a platform to facilitate African private sector participation and engagement in trade and investment issues in Africa, including trade and investment policy formulation and trade negotiations in support of sustainable development of African economies in line with Agenda 2063, the Africa we want. PAFTRAC serves to provide a platform for synthesizing and harmonizing the views of the African private sector on trade and investment issues, and to encourage a shared understanding of the benefits of trade and investment policies, to promote dialogue on trade and investment matters between government and the private sector in support of growth of both extra and intra-African trade and cross-border investments, and enhance the advocacy and supporting policy actions and recommendations of private sector on trade and investment issues at the rational trade corridor, regional, and multilateral levels. PAFTRAC also facilitates research on trade issues, including intra, extra, and intra-African trade flows, trade finance technology, and implications of trade and investment policies and measures on African economies and private sector development in Africa. Indeed, if I must just for a quick second mention that this has a long history. In 1985, the Aga Khan Foundation sponsored this conference in Nairobi on a tripartite approach to development, where the private sector, the public sector, and private development agencies work together, collaborate to advance development on the continent. I think that the role that PAFTRAC is playing today really gives meaning to some of the conclusions that came out of Nairobi in 1985. In this regard, and to support evidence-based policymaking, it is in this regard that PAFTRAC decided to carry out a survey that would assess private sector sentiment on regional trade and the AFCFTA. The results of the survey would give us insight into specific private sector challenges as regards AFCFTA and enable PAFTRAC to engage policymakers in developing trade-friendly policies and guide us in implementing informed capacity development and initiatives that can boost intra-African trade. The survey, which was administered to over 400 respondents, sheds light on the private sector's perspective on Africa's current and future economic and trade environment, particularly in the context of the start of trading under the AFCFTA and post-pandemic recovery. The positive sentiment expressed by survey respondents demonstrates the potential of AFCFTA and the eagerness of Africa's private sector to take advantage of the market access opportunities that it offers. However, there are several key constraints that need to be addressed to ensure that intra-African trade opportunities can be exploited to the benefit of African SMEs. I hope that the discussions around the survey findings prove helpful in shaping policy discourse and public-private sector engagements, as well as the policy and regulatory reforms that are required to support African SMEs to take full advantage of AFCFTA.
Prof, I'm going to have
PAFTRAC, we hope to make this a flagship annual survey that can inform private sector engagement with policymakers and help ensure that the voice of the African private sector is heard. I hope that you enjoy today's session, and I would like, in closing, to add that part of what comes out of this survey is infrastructure challenge, and all of those, railroad and all of that. But when we create markets, as Umar was saying earlier, markets have the capacity of their own of generating the infrastructure. And that is the so-called prosperity paradox that the now late Clayton Christensen drove so hard in his work at Harvard with the innovation. And I think that one of the things we learn from really focusing on creating markets is that the apparent difficulties are actually solved through markets emerging. The telecommunications or GSM explosion on the continent proved this worthily. About the time that Omar was talking about that we had these meetings at the Lagos Business School, very few people had any sense for how the industry would explode, because people kept looking at the infrastructure difficulties. But the fact that markets were created began to solve those infrastructure problems. And this is the prosperity paradox. And this is what we must push to ensure that we create markets, and the opportunities will transform our continent. So I thank you so very much for participating in this webinar. Thank you.
Thank you, Prof. Look, you've raised a lot of points, some of which we'll hopefully tackle now. I mean, you mentioned the point of new technologies. I mean, those are disruptive, they're changing the way we do things, but ultimately an opportunity, especially as lack of information was one of the main issues or constraints that people spoke about. But ultimately, technology is an enabler in terms of sharing that information. You also mentioned WTO international negotiations. I mean, we won't be able to cover that right now, but one question that's come up in the chat, I believe, is actually what role have the US, EU, and others, i.e. the international community, what is their role in terms of defining the success of the AFCFTA, if any? I mean, the main point that I see is ultimately, as a unified continent, as one big market, our negotiating hand is a lot stronger than what it was. So especially when it comes to things like fishing rights, IP, etc. So ultimately, we've got a bigger retaliation or bigger tools to retaliate against unwelcome behavior. You spoke about economic diversification. I mean, you know, you've been studying and talking about it for many years now. We know that ultimately the AFCFTA is here to drive greater diversification by creating these manufacturing hubs. Anyway, without any further ado, I'd like to go to our esteemed panelists. We'll have about 45 minutes of discussions. We've got Dr. Amani Asfour from the African Business Council. We've got Miss Liz Case from Afrexim Bank. Dr. Tokmo Chidede from the AFCFTA Secretariat. We're delighted to have you here, Dr. Chidede. We know you've got a meeting going on at the moment, but the AFCFTA Secretariat is key ultimately to unlocking the potential of the AFCFTA and solving some of these constraints that we'll be raising. And last but not least, I've got Mr. Hamadi Somaba, who's a senior manager relationship management at the Trade Finance at the ITFC, which is part of the Islamic Development Bank. And it's great because ultimately, and I was surprised to read actually in this survey that access to capital is still seen as one of the key constraints. So access to trade finance, access to other types of capital. But ultimately, I was surprised that businesses still see this as a major constraint in terms of growing their businesses and in terms of regional trade. So if the technical team can get my panelists on screen, that would be great. And we'll probably start with Dr. Asfour. Dr. Asfour is in transit right now in Madrid. That's the beauty of technology. And really, Dr. Asfour, I wanted to, we've had this survey report, but I wanted to hear from you in terms of your discussions with private sector, so businesses and business leaders. What are they waiting for from policymakers in terms of the AFCFTA, in terms of your discussions? Are there any particular points that or common themes that come up when you're talking to CEOs and business leaders from across the continent? Dr. Asfour, the floor is yours.
Thank you very much. Let me first thank PAFTRAC, Pan-African Committee for Trade and Investment, for this very important survey, and also thank Afrexim. We know that PAFTRAC is now the think tank and the resource knowledge with the Africa Business Council. The Africa Business Council is inclusive of all the private sector across the continent, including chambers of commerce, regional economic blocks, business councils, chambers of commerce, private sector federations, union of industries, manufacturer associations, small and medium enterprises, women and youth entrepreneurs. So as Africa Business Council, we are very happy to have PAFTRAC with us as the real resource knowledge center and think tank, which shows how this survey is very important for our private sector, because it really touched several issues that our private sector is looking forward to see how we have the policymakers. First, the private sector wants to be part and parcel of the negotiations. This is number one, because the policymakers and all the negotiators within the governmental sector is really not the ones who are going to implement the ACFTA, but it is the private sector. So this is one of the things that even I raised my voice with the with the ACFTA Secretariat when they had with the REX to make sure that we are part and parcel of the negotiation. Second, with reference to this great survey that was done and how the SMEs are very major, because all our African private sector is SMEs, is women entrepreneurs, is youth entrepreneurs, because also with our continent, more than 60% of the continent are youth under 30%, under 30 years. So our private sector, I have the real strategy of the private sector, which is call it 3 pillars, the Triad of Empowerment, which is about private sector strengthening. That's what we really need to empower our private sector capacity, including SMEs, women and youth. policy advocacy, we need to advocate for the policies and the enabling environment for the private sector. And this would include financial inclusion, because this is very important, as access to credit is very important. And the second issue is really, as private sector, we are advocating to have at least 40% of all government procurement goes to African private sector local products, because if we tend to say ACFTA, and then we tend to give the big corporates all the government procurement and the purchases, then we are going nowhere. So this is also one of the things that we are really looking for. The third pillar is really about product development. If we want ACFTA to happen, we need to have an African product that is strong, quality, competitive, standardized, and value added. We are not going to export again raw material or trade among ourselves raw material. We need to have a standardized products that we call made in Africa product that we are able to trade among ourselves. So the whole list of the African private sector with reference to the ACFTA is about what is it meaning for them? How the ACFTA will have an impact on the daily life of our people of the private sector? How does it create job? How is it make value addition? How does it transfer technology? How does it have industrialization? It is about the ACFTA as the flagship program for all African, the agenda of the Africa. We want a prosperous, peaceful, integrated Africa driven by the citizens of Africa. And the private sector is actually we are the implementers of ACFTA. So we have put a list which I call it the 10 Ins. It's about indigenous capacity building, information and communication. It's about internal reform policies. It's about indigenous capacity building, investment and access to finance, innovation, scientific research and technology, and digitalization, integration among ourselves, intelligence of the market, international market, because we need to see how we access also the international market. Of course, infrastructure and energy is huge for our list of reference to it. And then we really need to have intellectual property rights protection, increased productivity. So this as a whole is really about how we have the ACFTA make a difference in our African continent to make sure that the private sector, also the 10th in is inclusion, to be included, and not only one sector, but the whole of the African private sector, large corporates, SMEs, women and youth, cross-border women traders. What does ACFTA means for the young entrepreneur with a startup company? What does it mean for the woman who is crossing the border? What does it mean for an SMEs which want to export to another country? It is very important to see how the African private sector is involved in the agenda of ACFTA. Thank you.
Thank you, Dr. Asfour. Had you asked me 10 minutes ago if I could name 10 words starting with in, I think I would have failed, but now we know them. Inclusiveness, intellectual property, infrastructure, indigenous capacity, investment. Anyway, so there was one question I wanted to ask you. I believe that you've got some experience in terms of COMESA, and we've had for a long time these regional economic communities. And this is a question actually that came on the chat, I believe. And basically it's what can we learn from the regional economic communities that have been operational on the continent for many years now, in terms of, so what can we learn from these regional economic communities and take to the AFCFTA to ultimately accelerate the impact that the AFCFTA can have? So what are the lessons learned, both the positive and the less positive?
Thank you very much for this very important question, because as I was chairing COMESA Business Council for 2 terms, I had several projects that was really made an impact on the daily life of our people. So we had a big project called Sourcing from Local Vendors. That means with big corporates, how they source from local vendors. But in order to have, because we made agreements with big corporates, with hotels, with everybody to source from the local vendor, but they asked us, in order to source from them, they need a standard product. So that's how we started training our SMEs to have standardization for their products, that to meet the international standards, so they are able to supply big corporate, but also export across border. And that's exactly the 480 SMEs that we train every year are now exporting to across the borders and making sure that they supply the big corporates. I mean, a small example, as I was giving this example at the African Union Summit, a young girl from Uganda raised her voice and she said, I am one of your beneficiaries. She is into dried fish, and we help her to how to make packaging for this dried fish, and she is supplying to all the supermarkets in Eastern Africa. So this is one thing, lesson learned from Comensa Business Council. Another program that we are working now about is the digital financial payment, which is about how we have a cross-border women trader or any trader by the mobile trade among ourselves. So this needs a public-private sector dialogue. It needs a dialogue between the telecommunication companies, between the central banks, between the regulators, to see how we have the digital financial payment and digital inclusion. So our traders among the continent will be able by their mobile to trade among themselves from Kenya to Nigeria, from Egypt to Zimbabwe. This is also very important, which is the financial digital inclusion. The whole issue is about really having projects that affect our people and our SMEs based on value addition, based on standardization, based on strengthening our private sector and including all the private sector, large corporates, small, medium enterprise, women and youth. Thank you.
Thank you, Dr. Asfour. That's excellent, good takeaways. And ultimately, it's about using the levers that we have. I'd like to go to Dr. Tokmo Chidede, who's the investment expert at the AFCFTA Secretariat. Dr. Chidede, I am actually really delighted to have you here. The reason being is a lot of people are talking about the AFCFTA, but ultimately you're the guys in the house making these changes. And there's a bit of uncertainty. Occasionally people say they don't necessarily know what's going on, what's the progress being made. So I'd like an update on that. And also we heard from both Dr. Asfour and Prof. Utomi, who said that the private sector needs to be there in terms of designing, negotiating, and implementation in terms of the AFCFTA, and a lot hinges on the private sector. So I wanted to hear from your perspective, again, in terms of the areas that you guys are currently working on at the Secretariat, the types of conversations that you're having with private sector and the issues that you're trying to resolve to overcome some of these constraints. So Dr. Chidede, why don't you give us an update and in terms of what you're currently working on in terms of what you see are the main concerns and the main constraints that need to be overcome to realize the potential of the FCFTA and react to what's been said in the past 45 minutes or so.
Thank you very much, Omar. Good afternoon, good morning, ladies and gentlemen, depending on where you are. First of all, I'd like to thank the organizers for organizing this meeting and inviting the FCFTA Secretariat to participate in this launch. And I would also like to thank PAFTRAC for the great work that they did in the survey. And I really look forward to reading the survey, and I will share it with the colleagues at the FCFTA Secretariat. Coming back to your question, so what we are currently doing, we have what we call priorities at the moment. So our main priority is to make sure that significant trade starts to happen across the continent under the AFCFTA regime. And for trade to happen, we have fundamental issues that we need to finalize. We have fundamental issues that we need to make sure that they've been concluded in terms of negotiations. And what are these? We have rules of origin, tariff schedules, trading services, commitments, and as well as non-tariff barriers. I think we have heard from the previous speakers that non-tariff barriers are the major impediments to intra-Africa trade. So we are trying to do, what we are trying to do at the FCFTA Secretariat is to make sure that we address these concerns, because we have also seen that we have the bulk of the benefits of the FCFTA, they will come if we address these concerns. So just a brief update on what we are doing in terms of rules of origin. As we are aware that the rules of origin are not yet finalized. So far we have made some progress. We have concluded about 87.3% of the tariff lines. So the rules of origin have concluded. The rules of origin are important in the sense that they determine the goods the products that are going to benefit from the preferential treatment under the FCFTA. So this is what we have done so far, and we continue to engage with, there are quite a few areas that we continue to engage with stakeholders and member states to ensure that we finalize them as soon as possible, because without the rules of origin, we cannot trade. We cannot trade under the FCFTA. And in addition to that, the tariff schedules are quite important. And what we have done so far, so countries are submitting, member states are submitting their tariff offers. So far, we've received 43 tariff offers from the member states, and they are going through technical verification at the FCFTA Secretariat. And of the 43, 29 tariff offers from the member states are complying with the modalities and principles of negotiating trade in goods. So which means that these 29 tariff offers are ready to commence trade. These states are ready to commence trade since they comply with the threshold of trading under the FCFTA. And what's also important in the trade and services. So we have the protocol on trade and services, but for trade and services to happen, we have member states or state parties have to make specific commitments, which we call services commitments. And in service commitments, we have received 44 initial offers. So member states will submit initial offers. They go through the same process as trading goods tariffs to ensure that they comply with the modalities for negotiating trading goods under the FCFTA. So we have received 44 initial offers. Malawi was the latest one to submit its initial offers. And the other major area that you're working on is to ensure that we eliminate non-tariff barriers. So we have a mechanism that is up and running. We have resolved, I think, one case so far on non-tariff barriers. So what we are trying to do with this mechanism is to ensure that traders and businesses, they are able to report non-tariff barriers when they encounter them through trading or when they are at the border. They can report online, then they get resolved through the mechanism. And we're also trying to sensitize to make sure that the businesses, they know how to use the system. So the FCFTA Secretariat, in collaboration with member states and other development partners, are implementing or are planning next year. Some of the workshops are ongoing already. We have done a couple of trainings with member states and stakeholders to ensure that they are aware of this of this mechanism. Secondly, we are also, as we know, we have divided the negotiations of the FCFTA to phase 1 and phase 2. So we are, in as much as we are focusing on finalizing the phase 1 issues, we are also concurrently trying to make sure that we finalize or do some work on the phase 2 issues. So phase 2 issues, they include investment, intellectual property rights, competition policy, digital trade, and women and youth in trade. So far, what the progress that we have done, we've made significant progress in the investment area and in the competition policy area. So the meeting that I'm at the moment, we've developed a zero draft on the investment protocol. So the member states have received the zero draft, and before they come to this meeting this week, we're expecting that they have consultations at national level where they're supposed to engage the private sector to make sure that they get feedback from the private sector, since this protocol is going to be useful to the private sector when it comes to investment, because it's the private sector that invests. So this document is for them. So we have encouraged member states to do national consultation before they come, then we can discuss. So this week we are discussing the protocol, and I don't foresee us finalizing. So one of the concerns that have also come out in the meeting is they need more time. So after the meeting, they are also going back and they have national consultations with the private sector to ensure that they get more feedback, they scrutinize the document, and then later next year with the subsequent meetings, we can discuss. The same process is also in the area of competition policy. We've developed a competition policy zero draft, which was discussed last week, and member states are also in the process of doing the consultations. We have some meetings planned for early next year on digital trade, women and youth in trade, and intellectual property right, to ensure these are processes that will lead towards the development of these protocols for phase 2. Thank you very much.
Thank you, Dr. Talkmore. I've got a couple of follow-up questions, if I may. So ultimately, what you're saying, it's for the sovereign countries or national governments to talk to the private sectors, or to the private sector, sorry, and they will then feed back the private sector concerns. So the FCFTA secretariat won't necessarily speak to private sector directly. They'll be negotiating with those national governments. Is that right?
Absolutely. So if you look at the process, the FCFTA, it's a member state-driven arrangement. And one of the guiding principles specifically states that it's a member state-driven process. So which means even the negotiations themselves are member state-driven. So what we envisage is when member states come to the negotiations, when they come in the room and start to negotiate, they have done the homework. They've done national consultation, thorough national consultations, engaged with the private sector, the civil society, all the stakeholders, such that they have a clear picture of the national position that they should have in terms when they approach the AFCFTA. So when they come in the room as a member state, we see that they carry on their back the private sector, the civil society, and all the stakeholders.
Yeah, no. So look, it's very interesting, and it's actually very important that we share this information and that we understand what work the Secretariat is currently working on, and currently all the problems that it's trying to resolve. And I know that the rules of origin was a sticking point from the beginning in any case. So the fact that we're nearly there, ultimately, it's a good sign, because until that is resolved, nothing else is resolved, so to speak. And it has to be sequential. And I think that's very important that people know that we have to solve certain problems sequentially before we can ultimately open the floodgates. So look, when we hear from Dr. Asford and Professor Otomi about the private sector, being at that sort of the negotiation table, what you're saying is ultimately governments need to have that national consultation, and ultimately governments also need to feed back and feed through the information in terms of the developments and the opportunities that arise from the AFCFTA. Is that right? That's correct. Yeah, and in terms of because I think and this was quite interesting actually in terms of AfriExim Bank, and we'll get to you in 2 seconds, Lizaine Case. Well, in terms of information, but the lack of information was one of the concern that arose from the people who we surveyed. And in terms of the Secretariat, what information and support can private sector expect?
Thank you very much for such an important question. I mean, we have come to realize that the access to information is very important, especially if we are trying to make sure that the private sector implement and benefit from the FCFTA Secretariat, from the FCFTA agreement. If they do not have the right information, they do not have reliable information, and even the information that they understand, it will be very difficult for them to understand what are the requirements when it comes to export and imports, what are the documents that are required as they are trading, and where are the market opportunities. So we are implementing some initiatives at the FCFTA Secretariat to ensure that information is easily accessible to the businesses. I think the first speaker mentioned the Africa Trade Gateway, that the FCFTA Secretariat is working in collaboration with the AfriExim Bank to ensure that we have all this information that is available to the private sector. We are also doing we are developing a website for the FCFTA Secretariat such that we have all the information and updates on whatever processes that we are doing in relation to the FCFTA negotiations, the FCFTA processes, or any information that is very useful to the private sector. So we are also doing capacity building workshops These are we have some that are scheduled early next year to ensure that we do country workshops to sensitize the private sector, to sensitize all the stakeholders about the AFCFTA and the process, also give them an update on where we are in terms of the negotiations, where we are in terms of implementation. And we are also engaging with other development partners and organizations in terms of operationalizing the national trade portals. So each and every country are supposed to have trade portals where they house all the information about the AFCFTA and other trade agreements to which they are party. You might recall that the member states or state parties, they have assumed obligations when it comes to transparency, which means publication and notification of information. And we have quite a number of obligations in the existing legal instruments and even in the phase 2 protocols.
Okay,
Thank
look,
you.
I'm going to ask you 2 more questions. I'm sorry about this. Okay, and I apologize, but I think they're important points. Very quickly, so let's say Prof mentions, for example, shipping and shipping rights. So, for example, we know that there's a ton of foreign vessels shipping in African waters, but that's not something for the AFCFTA Secretariat. That's more for the AU that's an AU issue. Is that right?
Yes.
That's more of an AU issue. Okay, very good. And lastly, so Dr. Hasford mentioned procurement. Ultimately, governments spend a lot of money, and they can lead in terms of the procurement policy. I mean, is there something are there recommendations from the Secretariat in terms of procurement? Because ultimately, what we're saying is buy Africa from in terms of our governments. Is that right?
So we are working on a strategy, the private sector strategy. So we are also trying to address some of these issues when it comes to procurement, to ensure that we have Buy Africa and Made in Africa products, since this is very crucial when it comes to implementation of intra-Africa trade. And the AFCFTA is about intra-Africa trade. So we are trying to promote to ensure that we trade among each other. And what are we trading? We are trading products that are made in Africa. We are trading products that comply with the rules of origin. So even the rules of origin themselves, we are trying to make sure that the local content, the products that come from Africa, they have a certain threshold which comply with the rules of origin.
Perfect. Okay, look, we'll go to Ms. Lizaine Case at the AfriExim Bank. One important outcome again, or one point that was raised, was the lack of information. And I remember being at an AfriExim Bank meeting. I can't remember when it was. I think it could have been in Seoul during the AFDB meetings. And Dr. Arama was saying how unless we know that you can get leather from Burundi or Ethiopia, you'll continue importing it from Italy. So that information asymmetry was a big constraint to intra-Africa trade. And so it's been a recurring theme actually, and it was interesting to see it on this survey that the lack of good quality data and information is an impediment to growth and to trade. So, Ms. Case, can you tell us what the bank is doing to bridge the information gap? And I know you guys are very active in this particular space.
Thank you, Omar. And yes, that narrative is now well documented, both in this platform and also in the bank. We recognize that it's often not a lack of infrastructure, even financing, that tends to impede trade and investment in the continent. It really is that lack of information. And for this reason, our Trade Intelligence Solutions team, which I currently head, has been constituted to bridge that information gap, where people in one African country do not know about the opportunities in other African countries. So we work with importers, exporters, and investors who are either in Africa and looking to expand, or foreign investors who are looking for opportunities across the continent, as well as supporting African businesses who are interested in expanding outside of the continent. And we've spoken a bit briefly about the way in which we do that. We have a digital side under Trade Intelligence Solutions, which I'd be happy to speak more about later. but we also support and provide that more nuanced support directly to companies, and hold their hands, as it were, as they navigate these markets.
Okay, so tell us a little bit about the your platforms, basically connecting buyers and sellers, and how do we ultimately vouch? I mean, there must be some kind of due diligence on the back of it as well.
Yes, thank you, Omar. So my colleague Patrick mentioned briefly about our African Trade Gateway. The bank is pioneering a digital transformation and has invested in a number of digital assets, which combined, we believe, will address particular client pain points that continue to impede trade and investment across the continent. So trade intelligence solutions are business owners to two of these digital assets. The first is called our Trader Intelligence Platform, which is an intelligence platform that is looking to identify opportunities across African supply chains. It is also the repository where the bank will disseminate our trade intelligence publications. We produce around 114 of those publications annually. And in addition, we also recognize that, as well as the respondents in the survey, that it's not only about connecting our clients to information, but also providing that digital ecosystem where they can connect with each other. And within the Trader Intelligence Platform, we also will be embedding a B2B hub to do just that. Now, we also heard extensively about how it's often not only about identifying opportunities, but also understanding any market access restrictions, which could make one African country more competitive for any would-be investor or importer or exporter as they are trying to identify the right markets for their products. So our trader regulations platform is designed to do just that. It's looking to collect and provide a central source of regulatory and legal information for clients, and to be able to use this information to inform strategic decision making. You mentioned about our due diligence, and yes, we also have our Mansa repository, which has launched, which is collecting due diligence information on African counterparties. We also have launched our Pan-African Payments and Settlement System, which is an infrastructure that facilitates local currency payment. So combined, these digital assets are really helping our clients not only to understand African markets and identify the opportunities in these markets, but also it's about providing practical tools and solutions that can connect our clients to these opportunities and also help them transact in these markets.
Fantastic. I mean, it's been interesting following the Afri-Exim journey. Ultimately, I mean, I know you've been well. I know that in your statutes back in 1994 or whenever the bank was founded, you're there to increase Africa trade. But I know with the AFCFTA, you've also been given the responsibility ultimately to make this a success and to solve some of these market failures. And you've been very ambitious in terms of the projects that you've taken on board. I mean, we mentioned cross-border payments. Dr. Asfour mentioned that. I know that's something that you guys are also working on. But it's interesting to see in terms of that information asymmetry and lack of information, the different platforms that that you're building. And I didn't know about the market access restrictions, but ultimately it's also a game changer. But what was interesting from the survey actually is people will embrace digital solutions and digital technologies. I mean, Professor Otomi said that new technologies, they're disruptive, they're changing the way our economic the economic structures or the structures of our economy. So there's going to structurally change the way we operate and we do business. But ultimately, in terms of online, I think one major point is that people want these digital solutions, and if they're there, if they're transparent, and if they're open to everyone, then there's no reason why. Well, it's greater access to information, and it's also there's no reason why we can't hold certain people to account if these non-tariff barriers are still existing, after post negotiations. So I want to go to another constraint was access to finance, and that surprised me somewhat. Actually, I thought the access to finance bit was more or less resolved in terms of the different institutions, but obviously not. It's still a struggle. So, Mr. Bath from the ITFC, maybe you can tell us a little bit about ITFC and your experience when it comes to facilitating finance for SMEs and for businesses in general. It's obviously still a big constraint. So, what are you guys doing, and what's the feedback from the ground? Mr. Ba, please.
Thank you very much. I'd like to echo the sentiment of the other panelists to thank PAFTRAC and Afreximbank for such a great report. I think it really provides insights for policymakers to really understand what are the challenges that the private sector is facing. You know, we as development practitioners, we work with the private sector and understand what these challenges represent on a day in, day out basis. So really having a report of this magnitude really to help drive some of the changes that need to take place to support the private sector, I think it's great. Afreximbank and ITFC have great partnership in supporting and driving private sector support on the continent. Maybe to tell you a little bit about who we are. As you mentioned in your introduction, we are a member of the Islamic Development Bank Group. We were established back in 2008, coincidentally in the midst of the great financial crisis, really with the mission to support and advance trade in our member countries. I would say in our 57 member countries, really that span across Africa, the Middle East, Asia, Latin America. When we look at specifically the continent of Africa, out of the 55 countries, 27 of them are members of the ITFC. We work with governments and the private sector through really a holistic approach. And what I mean by that is that we extend support through integrated trade programs, which really combines not only trade financing, but looking also at capacity building, technical assistance to support government interventions and the private sector. You know, as it has been said throughout the last hour and a half, the significant importance that the private sector has in really alleviating poverty, supporting development in member countries. When we look at it, 80% of jobs that are created on the continents originate from SMEs. From the GDP contribution perspective also, SMEs contribute anywhere between 40 to 50% of GDP. So it's huge. The SMEs really plays a critical role, and the private sector by and large, really to support not only the FTCA, but really to have the development impact we would like to see in Africa. Now, going through the COVID-19 pandemic has really brought home a lot of these issues, concerns. ITFC went through an assessment of its 10-year strategy that started back in 2017 to really see how we can better position the corporation to support member countries and the private sector as a specific key driver of economic growth. As a result of this assessment, a fully dedicated private sector division was established to really drive home the efforts that ITFC is contributing towards supporting the private sector. Every year, we approve basically anywhere from $800 million to $1 billion to support SMEs and the private sector. And the way we do that essentially is by extending financing to local banks that can own land to SMEs and the private sector. Now, as I said earlier, in addition to the financing component, we also look at the capacity building, the technical assistance component to see where gaps exist. Because as the report coincidentally indicated, if you look at the SME sector, about 2/3 of applications related to financing get rejected by banks. That's huge. So there's an information gap that exists between banks and SMEs. So as a development institution, we come and try to find some sort of a solution for the SMEs so that they can support and present financing requests, arrangements that banks can ultimately support. So this is one area how we support SMEs in the private sector. Now, the other area also is through one of our flagship programs that we call the Arab Africa Trade Bridges program, which is really a multi-donor, multi-country, multi-organizations program that looks to promote and channel trade flows, investment flows from African countries to Arab countries and vice versa. So it's really a platform that helps B2B SMEs to come together and to not only exchange goods, services, but also drive the process in terms of capital going from the Arab countries to Africa. So the objective for the private sector for IETFC over the next 5 years is quite telling in terms of the drive, the push that we're trying to instill in the continent. Looking at overall where the private sector is going over the next 5 years, we expect really to double our intervention in terms of providing financing to private sector and SMEs from $1 billion to about $2 billion by the end of 2025. Thank you.
Thank you, Mr. Ba. So I believe that I'm not mistaken, but I read recently that the Islamic Development Bank is the second biggest multilateral development bank after the World Bank. I may be mistaken, but that's something I read. So it's good to know. But in terms of, you mentioned a point there, in terms of access to capital, what's the issue? Because I hear that there's a trade finance gap in Africa in excess of $150 billion or so. But what you just mentioned is you said that 2/3 of requests get rejected. So is the problem one of capital, or would you say it's one of capacity, whereby actually people or businesses aren't supplying the right information, therefore we're getting a lot of rejections, therefore that's the main constraint. So is it the capacity side that we need to work on, or is it the capital whereby we need to be smarter and see how we can raise more or how we can generate more capital to the private, to those banks to lend to the private sector?
Yeah, I think it's on both fronts. I think we have a capacity challenge, but also a capital constraint. If I look at on the capital side, looking at IETFC's interventions, for every dollar that we do pledge in terms of our capital into providing financing, we raise about $4 in the capital markets through partner financial institutions. And if you look at the DFIs globally, every year, DFIs and multilateral development institutions extend close to $35 billion to support trade. Notwithstanding this, as you mentioned, you have a trade finance gap of $90 billion today, which is expected to grow to about $110 billion. Now, I think from the capacity perspective, we have to find ways to de-risk the environment, because I think capital is available. It is sitting on the sidelines. But investors would like to have visibility in terms of making sure that when they invest their capital, they are able to get it out on a moment's notice when and how they so see fit. So having really regulatory frameworks, legal frameworks that allow capital that has been sitting on the sidelines to come in and really support the AFTCA objectives in supporting the private sector, I think will be critical. On the capacity side, I fully agree. When we look at commercial banks' requirements and what SMEs can provide, there's definitely a gap. Commercial banks are used to dealing with corporates. That is really the sweet spot. Looking at financial statements that are audited, looking at projections and business plans that are very well thought out. This is an area where we provide the capacity building, the technical assistance to SMEs to increase financial literature, to understand how to really structure a financing program that a bank can typically would look at and favorably support in terms of providing financing. But also looking at the banks, because the banks also needs to put themselves in the shoes of a financial institution study looking at really supporting the overall economy. As I mentioned earlier, when you look at the SMEs in terms of their contribution to GDP growth in the country, it's a significant part of what the countries overall are generating in terms of GDP. So there has to be a closure of that capacity deficiency gap from both the banking sector and the SME sector to be able to push forward the financings that we talked about in terms of the gap that we are seeing out there.
Yeah, so I mean, there's one take home from there. I mean, there's many take homes, but one that that comes to mind is you mentioned that visibility, which is ultimately extremely important, and this is why we're having this discussion as well. And I'm going to get back to visibility to you, Dr. Chidede, in terms of timeframes that we need to look forward to, that the private sector needs to know in terms of what's going to happen at the Secretariat in terms of your negotiations. But one last question to you, Mr. Bawi. I know time is running out, and I've tried to encapsulate the questions from the chat and from the Q&A as part of my questions to all of you. But in terms of, so Pat Otomi mentioned some of the sectors where we're seeing not necessarily growth, but where we're seeing activity in terms of exports and imports. But looking ahead, which sectors would you say have the potentials of rapid growth on the African side in terms of trade?
I think the agricultural sector clearly is an area that will benefit a lot from the AFTCA. Looking at the role the agricultural sector is playing in the continent in terms of providing employment, 2/3 of the continent's working population is in some shape or form in the agriculture sector. The contribution of agriculture to GDP and in terms of also to total exports, clearly the agriculture sector stands ready to really take full benefit of the AFTCA. I would also look at, I think one of the panelists also mentioned in terms of the infrastructure deficiency that we have. We talk about economies of scale. Now that the borders are falling down, investors look at infrastructure projects are really being viable in terms of return on their investments. Now, when we talk about roads, construction of airports, seaports, you're creating the market where now investors can feel the confidence to come in and invest big sums of capital to support the trade capitalization in terms of where we want to go. The other sector also is the health sector. You know, one thing that we've noticed and learned through this COVID-19 pandemic is really how ill-prepared many of the health infrastructure systems across the continent were. I think this is creating really a great opportunity in terms of countries looking at potentially how they can enhance the health systems, you know, to really mitigate future outbreaks, pandemics that may happen. We're seeing a lot of, on the B2B, on the AATB program, as I mentioned earlier, on the pharmaceutical sides, we're seeing a lot of activity exchanges on the B2B side to really increase this area of collaboration and trade amongst the different countries, not only on the continent, but also from the Arab states to the African continents. Now, those in a nutshell, looking at the agriculture sector, looking at the health sector, and the infrastructure sector would be the three sectors, in my view, that would potentially benefit with the AFTCA as we move forward. Thank you.
Mr. Bao, thank you very much. So I'm going to give you all a minute or so to comment on what's been said and what we can look forward to in 2022. Maybe we'll start with Ms. Case from Afri-Exim Bank in terms of projects and in terms of what more we can expect in 2022. What are you working on yourself, and what can the private sector expect from your projects?
Well, what I'm working on myself is, one, ensuring that we fully leverage all of our digital technologies. I'm also supporting the development of our upcoming African trade centers, where we are looking to disseminate on the continent through these centers the much needed and vital trade intelligence solutions, as we've discussed, which remain such a pervasive challenge for all of our importers and exporters to overcome. And also I'm working with our clients who are looking to expand and who are looking for opportunities, and I'm supporting them to access these opportunities. So this is across sectors, across Africa, given that Afri-Exim Bank is ultimately a trade finance institution.
Okay, and we go to, thank you very much, Ms. Case. So we're going to go to Dr. Chidede, if I may. So in terms of timeframes, you mentioned what you're currently working on, but in terms of timeframes, in terms of 2022, what can we expect? When will these negotiations be finalized?
Thank you very much, Omar. I cannot give you specific dates or timelines for next year, but what we are currently working on is to make sure that before the summit, sometimes early next year, before the summit happens, because everything that we are working on needs to be adopted by the Assembly of the African Union. So what we are trying to push is by the time we have the summit early next year, some of these things will be finalized, because for them to be to enter into force or to start being operationalized, they need to be adopted by the Assembly. So that's what we are currently working on. So hopefully by the time we have the Assembly next year, we would have finalized some of these issues.
Thank you very much. Closing comments from Dr. Hasfoud in terms of what you've heard in the past 45 minutes or so, and hopefully a note of optimism.
Well, I'm very optimistic always, and I believe that the major issue is the coordination and collaboration among all of us as stakeholders, because one team cannot do it alone. So I believe that with ACFTA Secretariat looking for the negotiation, we as a private sector going together, PAFTRAC, all the private sector, the governments, the financial institutions, the research centers, all of us has to make it right and to make sure that the Africa we want is inclusive. The Africa we want is the industrialization. The Africa we want is creation of job. The Africa we want is really a meaningful impact on the daily life of our people. And this is the quality of life and promoting our Made in Africa product. We are rich in Africa. We are the richest continent in the world, but unfortunately, our people are suffering the poorest in the world. So it is time that Africa takes its lead. It's Africa that increase our management and industrialize our raw materials and brand our own manufacturers in all fields, and make sure that all of us are included. Thank you very much.
Thank you, Dr. Hasfoud. Thank you, Ms. Case. Thank you, Dr. Chidede. And thank you, Mr. Barr, for your interventions, for your comments. From my side, it's been very informative. I think we've had practical discussions, practical answers in terms of ways forward, what's happening. But ultimately, I think the main message here is this is a common agenda, and it requires all of us to participate in terms of designing, negotiating, and implementing or helping implement with the implementation of the AFCFTA. PAFTRAC is here to support you. We'll be conducting more surveys next year, more discussions. Ultimately, your governments, so your national governments, have also got a role to play. So it's for you to hold them to account, to have those discussions, to make way of your constraints and your issues, so that we didn't make this so that we make this a success. So I'll give the closing remarks to Professor Pat Otomi, who will maybe want to also answer one last question from my side. Is ultimately, you mentioned international partners, but are we dependent on international partners for the success of the AFCFTA, or is it really in our hands and it's for us to see to make this a success?
Well, thank you very much, Omar. Africa's future has to be taken into the hands of Africa and Africans. We can find partners because there's mutual benefit that can flow from trade for us and for our non-continental African partners. However, we must take the decisive steps that shape our future. You know, as an academic who teaches business and an entrepreneur, I've approached entrepreneurship borrowing from a Brazilian educator from the 60s and 70s called Paulo Freire. Freire wrote a book was titled The Pedagogy of the Oppressed, and talks about how colonized minds prevent the creative thinking that enables overtaking the colonized. And I like to call it the pedagogy of the determined in my teaching entrepreneurship. I think that we must become determined to see our future and to ask ourselves what we need to learn to drive this transformation from now to that future that we envision. And that work must be done by us, not by some development partners. If they come in because it can benefit them and us at the same time, that's fine. But we must really take the reins of things in our hands and try to drive them. For me, this has been a very rich discussion. I was very pleased that you kept raising the question of, is the problem still financing? Because let's be very clear, there's plenty of capital in the world today. I mean, the French economist Thomas Piketty will tell you that there's never been more capital available to humanity through history, and there is today. Globalization has led to a accumulation of plenty of capital. Unfortunately, in some ways, it's in a few hands. However, we need to prepare Africa to be attractive to those few hands. But very importantly, we need to prepare African entrepreneurs to recognize that they can build global value chains.
Yep.
And I also think that it's important for us to think about aggregation across borders in Africa, creating those huge trading companies of the Marubeni type that can help African small businesses across borders, aggregate, and then sell into global markets. We must be prepared to do things like that. And I think that's where our future does really lie. The challenge of now is one of passionate thinking on the part of African business people who do not sit back anymore and say, let the politicians solve the problems. You are as important a stakeholder as any politician, as a business person. So you must be able to engage. I had a World Bank rep in Mauritius many years ago who used to make the point that the Mauritius Chamber of Commerce, you know, is probably a better debating chamber than the parliament and the influence policy choices. I think African businessmen, hopefully with the work that we do here in PAFTRAC, will position themselves like that. It's in interest of policymakers that they make the right choices. And if they do, I think we'll all be proud of where Africa will be. You know, we've got this book going around, Africa, the world's next factory. Can we dream it? If we dream it, surely we can make it happen. That's my mantra. If you can dream it, you can make it happen. And if we make it happen, the future will be so bright that we all need to buy sunglasses. Thank you for the privilege of chairing, of being at this meeting, and wish you very well. Thanks, Omar.
Thank you very much for your closing remarks. We're 12 minutes late, but I think it's been productive and engaging. And really, I think the message is, I mean, you said earlier on in your interventions, you know, with the FCFTA, we should, but really when we have this conversation in a couple of years' time, we'll be able to say, this is what has been done, this is what we have done. So using the present and the past as opposed to the conditional. Thank you all. Have a great end to the year. We'll be sharing the report with all participants, and I thank you for your time and your engagement. And yeah, without further ado, I call this meeting to